What are the big problems that they're facing when it comes to building wealth?
A lot of people think that gaining wealth is, the hard part and keeping it's easy. Personally, from my experience, it's the complete opposite.
When it comes to building wealth, I like to call it the game of money. And you might imagine that people that have been playing a game a lot longer than you probably have some tips and tricks and strategies that they could use to probably beat you pretty quickly. So in the game of building wealth, you might imagine that the wealthy, the billionaires, have access to tips and tools and strategies that you don't know about. But there's ways we can change that. So today I'm going to sit down with Peter Dunworth. He's the founder of the Bitcoin Advisor. So he works with high net worth individuals, family offices, to help them build generational wealth and incorporate Bitcoin into that strategy. So if you want to know the tips, tricks, and strategies the high net worth individuals are using so you can win the game of money as well, pay attention. In regards to preserving that wealth and then thinking about that wealth generationally, who outright think it's bad to leave wealth for your kids?
I completely disagree with
Okay.
it. I look at my responsibility to my family, to my legacy. Sadly, there's no real other benchmark in society that we have that's universally accepted other than how wealthy you are. It's a scoreboard that everyone understands what the scoreboard is. There's no intangible around it. It's a number that you can look at.
Yeah.
It's the only objective measure we have of success.
Peter, thanks for joining me today.
Pleasure to be here with you, Mark. Thanks for having me.
Yeah, what a great opportunity. Just happened to be in my neighborhood, and so swing by for an interview, so I'm excited about that. There's a lot of overlap on what we do, talking about wealth just overall, which is a pretty big topic. So I want to dig into problems that high net worth families, individuals have, specifically around keeping wealth. There's a lot of attacks on keeping wealth. It's very hard to keep it. It drains away from us. Governments are trying to take it from us. So how do we keep it? We talked briefly about some potential taxes. I want to get into that. How Bitcoin can help fix all of this. Build wealth, keep it from losing wealth, build it into the future. I want to think, since you're international from Australia, sort of what Trump's announcement means to the rest of the world. And then I want to go through some different strategies that high net worth individuals have. So hopefully we have time for all that. So let's just frame it up here really quickly. So you work with high net worth individuals, family offices. Family offices typically would be, you can define it for me, but define what family offices are and define with me for us, what are the big problems that they're facing when it comes to building wealth?
Great question. Family offices, in my definition, are families who have generated substantial or significant amounts of wealth that want to be managing those assets themselves.
So what would that number be? Like what's that threshold?
It can start at 25, I would have thought, and
25
move
million?
upwards to billions of dollars.
Okay, so 25 million or more.
I think that's a starting point that you can start looking at that. Under that, you're probably working with a multifamily office where you're leveraging off a number of other families to generate investment ideas and returns, and then leverage that into further ideas. And from my experience, a lot of the families that we work with, the number one issue that they've got is keeping their wealth. The families that we work with are not interested on a return on capital. They're interested in a return of capital. Meaning they're not focused on the percentage gains that they're making. They've made the pile, they've made their wealth. They want to make sure that it's secure. So the first thing they look at when it comes to any investment, whether it's real estate, whether it's stocks, properties, bonds, or even Bitcoin, is they want to make sure that the ownership, the custody is locked down and they can't be subject to a number of different attacks on that absolute base layer. So ensuring that you own what you think you own is probably the first port of call that you need to look at. And probably something preliminary to that is, what are the structures from a legal perspective that you have access to maximise the outcomes that you want to get from the investments that you're putting that money into. So I think it starts with the structures, then.
Got it. So that's an interesting way to think about it. And, I've often said, and this is unfortunately from personal experience, that keeping money is a lot harder than making it, which sounds crazy for most people who haven't made money. But once you've made it, as I found out the hard way, losing it all, keeping it is much harder. And then the more you have of it, probably the bigger problem or challenge that becomes.
Agreed. And this is where a lot of people think, it's so easy being wealthy. And to a certain extent, there are a lot of problems that go away when you're wealthy, but with great wealth comes great responsibility, and there's a responsibility that's put on you to not only maintain it but to preserve it. And then the questions around legacy start entering your mind around, how do I preserve this for the people I love into the future? So a lot of people think that gaining wealth is, the hard part and keeping it's easy. Personally, from my experience, it's the complete opposite. It's the keeping it that's the tough part.
I want to get into the generational wealth. That's something I think about a lot. That's kind of the stage that I'm in right now. So I want to come to that. But before we get into that, let's just talk through some of the major asset classes that people can invest into. You mentioned real estate, bonds, Bitcoin, things like that. And Michael Saylor sort of laid out sort of some of the flaws in each one and how they cost you money. But one of the biggest problems is also taxes. So you were mentioning before we started recording that in Australia, they wanted to launch, I believe, a tax on unrealized wealth at 3%. Or I'm sorry, at $3 million.
Correct. In our pension system, there's legislation going through on the 1st of July that if nothing changes, then that legislation will go through 1st of July, and they're going to tax at a rate of 30% unrealised capital gains tax on pension balances over $3 million. So if you have a 10x return in Bitcoin and you're all in Bitcoin with a $3 million fund, you're going to make $27 million in a year. They're going to send you a bill for $8.1 million of unrealised tax gains. And now, in order to pay that bill, you're going to have to sell down some Bitcoin, and you're going to incur a further $800,000 realised capital gains tax to pay the bill. You'll pay $9 million on that gain, even though, and it's an oxymoron to say an unrealised capital gain, because the very definition of capital gains means that you've disposed of an asset.
Right.
So they've just redefined the English language to suit an agenda that they want to take your assets before you've gone full circle on the investment.
Now, the reason why I want to dig into this and talk about it a little bit is because I think both you and I probably agree that whatever's probably happening in the G7, if you want to call it the West, Canada, Australia, is probably a test bed for what may be coming for the rest of the world. So if it's happening in Australia, it's probably coming to Canada, it's probably coming to Europe, and it's probably going to be coming to the U.S. at some level. So if we talk about this, now you said it's in people's pension accounts.
Correct.
So if I hold it in a personal account, if I own the stocks or whatever assets personally, that's not subject to that?
Correct.
Okay.
So you can hold it in trust, company, or personal, and it won't be subject to an unrealised capital gains tax. I think for the moment and the way it was proposed, it was ill thought out legislation that was proposed. No one really picked it up. No one really cared about it. The feedback I've had from the industry is that no one really cares about rich people getting taxed more.
Yeah.
But what they don't understand is the downstream consequences of that, and anyone who's holding Bitcoin in that pension system will very quickly reach that $3 million threshold, and then we'll all be subject to the tax. Yeah. So it's a slow creep that has no indexation as well. So you're going to be suffering that regardless. And if we think probably along the lines similarly from a hyperinflationary type event, or at least an inflationary event, $3 million is not a lot of money.
Yeah.
We're going to be there in the next decade.
Yeah. I mean, the crazy thing with that, to your point, it's not a lot of money, and because of the inflation, when you think about, I mean, here we are in this beach town in Southern California, and I know my neighbor across the street from me, house is probably worth, I'm guessing $4.5 million, and he bought the house for $330,000. I believe in like around the early 90s, so that's 25 years ago. So they bought the house for $400,000 20 years ago, and now it's worth $4.5 million. So basically, through the money printing, through the inflation, they've artificially pushed the asset price up, and then they want to take the money. So you're actually worse off, right?
This is the problem. That predatory event, which is sort of pushes inflation, makes everyone feel like they're wealthy and they're richer than they are. But the problem is, your neighbour, if he wants to monetize that in any way, shape or form other than debt, needs to sell that asset, pay whatever taxes are available on it. Whatever's left, he still has to find a home.
Yeah.
And guess what? Everything else has gone up around him. So he'll probably be buying an inferior asset. And this is where, to me, Bitcoin plays a huge part, particularly for those real estate investors, of diversifying a portfolio and adding in an asset that they can understand or easily understand that is very similar and acts very similarly to real estate. But to me, it has significant upside over and above what real estate does, even with the leverage that you can get there.
Yeah. Before we get into that, though, just kind of sticking on this for a minute, I mean, why would anybody keep money in a pension account if that's the case? Wouldn't everybody just close their pension accounts out and move them into other assets?
Well, the problem is this is captive for anyone under 62 or 65 years of age.
They're not allowed to sell?
They're not allowed to sell. Well, they're allowed to sell their assets, but they're not allowed to take the assets out of the pension system until they reach what's called preservation age, which is around between 60 and 65. But by the time we get there, they'll push that to 65 to 70.
Yeah.
And it's kind of a Hotel California for capital that it can go in, but unless you're retired, you can't take that money out.
Now, is this only for government workers, the captured pension system, or is it like private businesses also paid into that?
This is for everyone in Australia, but just the absolute duplicitous event that happens on this is that most government pensions are not subject to this tax because they have something different called a defined benefit scheme.
Of course.
So fortunately for the politicians who are making decisions for the rest of us, their superannuation scheme or pension scheme is not affected. So
of course,
they will not suffer the tax consequences that everyone else will.
Sure, that's how it always is. Recently, I saw Larry Fink from BlackRock was over, I believe, in India, and he was talking about how BlackRock wants to help these other countries build up capital markets. So the U.S. sort of has this unfair advantage because we have these capital markets that attracts all these capital, but he wants these other countries like India that are rapidly growing to also have capital markets and maybe try to kind of bring them up. And he talked about the problem that India has because most people down there own gold. So they keep it as jewelry and they keep their wealth in that gold. And he talked about in a roundabout way where basically India should sort of make that illegal because they need all that wealth in the system. Right. And so that's kind of the point that you're making. They want that money in the pension, and then they want to probably continue to raise that pension age because they need that money to stay in there. And that's exactly what Fink was saying. He's like, no, we need all that gold to go into the system so we can have it. And he even did talk about the age at which you could withdraw it. But even more specifically, what he talked about was the way, meaning the schedule, the time, how much you could withdraw at a certain time. Because again, they want the money. And, with governments going broke, I mean, they're just going to be coming for everything. We just have to sort of expect that.
And sadly, this is why I bring it up. And it's a cautionary tale because Australia is a test net for the rest of the world when it comes to this. If there's very little pushback in Australia, then other governments will look at that and think, well, the Australians didn't arc up about it. Why don't we test it? Yeah. And so it will just proliferate amongst those G7 countries that you talk of.
I just went to Australia for the first time. I was down there just a couple months ago. And I grew up, watching Crocodile Dundee and, Steve Irwin. And I just had this vision of these Australians being these rugged and burly kind of people. Like, that's not a knife. This is a knife, right? Or Foster's like, this is a beer or whatever it is, right? But yeah, it sure seems like the Australians are pushovers these days.
Sadly.
I hate to say that, right? It all started when you gave up your guns.
Yep. And I think there was it was an opportune time for the government to have that gun buyback and seizure of the guns, and Australia hasn't really pushed back on that whatsoever. Gun licensing is very different to what it is in the US. The US, it is a right. In Australia, it's a privilege that the government bestows on you if you meet the certain hurdles. You need to go through all sorts of licensing and training in order to get that. There are some exemptions for farmers and the like who need that for maintenance of property, but it's a very different culture in Australia to America, and I think there has been a whittling away of that ochre Australian who pushes back on authority to say, hey, we don't want to deal with that, leave us alone, and probably highlighted by the reaction, the behaviour around the vaccine mandates and lockdowns that we went through, which I think were probably globally the most draconian out of anywhere. And I live in New South Wales or Sydney. South of us is Victoria, which had arguably it did have the world's longest lockdown. And so I had a lot of friends down there who, just walking in the street, they were stopped by the police to say, what are you doing? Where are you going? You're not allowed to be out. You've got to go home. It's like, I'm walking the dog. Like there was some serious concerns raised, and I think we're very quick to memory hole that and not draw attention to it, forget it
Yeah.
ever happened, and move on until the next one, right?
Sidetracked into this little conversation, but just for a minute, we'll get back to the generational wealth question I want to get to. But what's going on in Venezuela right now, I mean, is a perfect example of where things eventually devolve to, right? And so in Venezuela now, did Maduro win the election? Was there some sort of a coup that's going on? Like, what's going on down there? But more importantly, without getting into any facts, because we don't know the facts, but what we do know that's facts is, like, you have the military opening fire on innocent civilians. We do know that. That's a fact. Now, we don't know the circumstances behind that. And I think I retweeted, I think it was Spike Cohen, said that socialism is one of the things that you can vote your way into, but you got to shoot your way out of.
Australians don't have any guns left. That's a problem for
Yeah.
Australia.
Yeah.
In America, not so much.
Yeah. Although Kamala Harris is already talking about trying to change that as soon as she can. So we'll see how that goes. Anyway, let's get back to the topic at hand here. So high net worth individuals, they think more about preserving wealth than acquiring, because they've already made it. So how do we keep it? They think about what types of assets they could buy that they could keep that, taxes being one thing that they have to navigate. But in regards to preserving that wealth and then thinking about that wealth generationally, and as I said, this is something I've been thinking a lot about, because at the stage I'm at with my kids, I just went through setting up trust structures. We went new trust structures and building like family constitutions, so that there's like a set of rules, like a U.S. Constitution around that wealth as it goes down generationally. So it's sort of where my head's been. And I've been sort of battling some people on Twitter because there's this whole seemingly movement, or maybe it's just caught my attention, of people, a lot of prominent Bitcoiners even, who outright think it's bad to leave wealth for your kids.
They're entitled to their own opinion.
Have you seen that, and what do you think about it?
I have, and
Okay.
I completely disagree with it. You know, I look at my responsibility to my family, to my legacy, not only to my children, but to, you know, my lineage. I need to honour their lineage and the sacrifices that they've made to be as successful as I can be, and then to ensure that not only I'm a success, but my children are a success. And sadly, there's no real other benchmark in society that we have that's universally accepted other than how wealthy you are. It's a scoreboard that everyone understands what the scoreboard is. There's no intangible around it. It's a number that you can look at.
Yeah.
It's the only objective measure we have of success. Now, it's not the only way to define success, but it's the universally accepted way of that. Now, I look at that and think, why would you want to rob your children of the ability to leverage that and further the legacy of everyone who's come before you? And you think about all of the sacrifices that you make as a Bitcoiner. I personally look at my children, I think I want them to go on and be productive parts of society. And I think if they've got capital, and I think it will be an indictment on myself and my skills as a parent if they don't make a contribution to society. I want them to go on and, you know, do great things, and having access to resources enables them to further the family legacy into the future and become meaningful contributors to society.
Yeah. I think of it as two different ways. I think, you know, because we went into, you know, from an equity-based system to a debt-based monetary system, sort of maybe officially in 1971, severing the ties to gold. In a debt-based monetary system, we're basically stealing value from the future.
Yes.
Right? And so we're literally stealing value from our, you know, from our kids and grandkids, et cetera. And so I just think that's like the direction of the world. But as a Bitcoiner, I think about flipping that, and like our money should buy us more goods and services in the future, and we should be building value into the future, not stealing from it. And I've been sort of using this analogy and this way to look at it as like a blockchain, where it's like my life is proof of work. And I'm building a block, and I want my kids to be able to attach their block onto my block, and my grandkids to attach the block onto a block, and to continue to build this like blockchain of life. And like, why wouldn't we push value into the future as opposed to stealing it from the future? Now, I could see how people would say it's bad for kids, I suppose, if you raise bad kids, but that's more of you, not a symptom of the money, right?
I agree. And this is where money, you know, people say money changes you. I don't think it does. It just exemplifies and expands on what your true nature is. If you're a bad person, if you've got resources, you're going to do really bad things. If you're a good person and want to make contributions and build out and help society, having more resources allows you to do that. I think it's an internal struggle that's projected onto to other people.
Yeah.
It's always an internal struggle. And this is where, for me, you want to provide optionality, whether it's to your children, to your clients, to anyone around you, providing options and then giving others the choice to make. I want to be in a position that they've got all the resources that they could ever possibly want. And then if they decide that they want to make a contribution, their best way to contribute to society is to make donations and give the money away, then so be it. And to me, and I was just talking about this with a group of tax attorneys across the country yesterday, that to me, Bitcoin represents the best generational asset to pass on, because not only is it going to be the longest lasting, it's going to be the best performing, but there's a very curious thing that you can do with Bitcoin that you can do with no other asset, and that is, to your point about being able to put assets into the future, you can time lock assets for different generations. And so, or you can time lock Bitcoin for different generations. And that's something I spend a lot of time thinking about, that, you know, you might not want your children to benefit from your Bitcoin or all of your Bitcoin, and you want to leave Bitcoin in for further generations out for your grandchildren or great-grandchildren or great-great-great-great-grandchildren. And all of a sudden you can time lock a portion of this asset today that's going to continually grow into the future, that can only be accessed at a future point in time, which is, to your point about the debt robbing from the future to take now, that is the complete inverse to that. And this is where I think Dave Bailey came up with an innovative solution to pay off the US national debt by buying $1 trillion worth of Bitcoin, time locking it for 30 or 50 years, and then have that as a way to pay off what's currently here now.
Imagine the dump on the market in 20 or 50 years, what that would look like, though. So you just made a couple big claims. So you said that Bitcoin is the longest lasting, it's the best performing, and then the ability to time lock it. Let's just go through that. So you said it's the longest lasting. So you talk about high net worth individuals thinking about saving their money in bonds or real estate or businesses or whatever. You said Bitcoin is the longest lasting. Break that down for us.
It's ironic, given it's only 15 years old, right? And that comes from years of studying this. And you're probably of the same mind that, you know, the more time you spend looking at an asset or an investment, the worse it gets. You find holes in it. Oh, this could go wrong, that could go wrong, what have you. I've spent close to 20,000 hours now staring at Bitcoin, trying to poke holes in it, understand what I don't understand, and I'm still an amateur even after that time.
Yep.
But from what I can see, I can't find any holes with it. It gets better every time I look at it. And this is where it's going to be the longest lasting asset that we've got on many different layers. Firstly, I think it'll outlast just about everything else in the world, whether it's stocks, bonds, properties, governments, society as a whole. That is the substrate of our structure moving forward. It's just that information isn't evenly distributed. So not too many people understand that. If they did, we'd have Bitcoin in the millions or billions of dollars per value. When I talk about Bitcoin being the longest lasting, all you have to do is buy it and hold it. And if you self-custody it, that can last essentially for 10,000, 100,000 years into the future, however long society is going to last. However, I'm very doubtful that you can achieve that same outcome with property or bonds or shares. You look at the average length of a company across our countries, and if you include startups, the average length of a company would be about 5 years. Now, most businesses fail within 5 years. Now, if you're fortunate enough to own a big company like one of the big banks or insurance companies, they may be going now for 100, 150 years, but they are, the 0.001% of companies that have ever been established. So do I have the skills to figure out what companies are going to be around at that point in time in the future? Absolutely not. And this is where the whole idea of index investing, which I disagree with, but it's been a very palatable format for people to invest in. This is why people invest in passive index funds, because they don't have to pick the winners. They just have to pick the exposure to whatever the market is going to be at that point in time. Now, that's a great way for preserving wealth, but you're not going to outperform anything. You're just going to keep it stagnant, and over time, your wealth is going to deteriorate relative to the winners who pick the best assets. So I look at that and think, that's not going to make your wealth last long. And this is where, to me, Bitcoin is a complete anomaly, because I believe Bitcoin is our first risk-free asset. It's not our volatility-free asset, and there's a key distinction between that. But if you're thinking in generational terms, you can buy Bitcoin and know that, okay, you can deal with a bad 2 or 3 years because we're planning for 30, 50, 80, 100, 200 years. In fact, we've got one client who's planning for trying to have a 200-year plan for his legacy, and it revolves around his business and Bitcoin backing it and funding his vision for the future. Now, no other asset would I have confidence in to fund a 200-year plan, but with Bitcoin, I certainly believe it.
Let's dig into that a little bit. So it's the longest lasting. Like, obviously, a house is probably not going to last that long. I mean, there are some that are several hundred years old, but they have to be rebuilt and whatnot, right? So obviously a car, businesses most likely are not that long. So I get that. However, does that assume that means that it's an asset that you could just buy it and never touch it again for 200 years? Because I could just sell one property for another. I could rehab the property. I could sell this business, buy a different business. So I could manage that wealth through real estate and businesses, but Bitcoin is more of like a hands-off approach?
Completely.
But I mean, is that a big deal?
No, I think it's a huge deal because every time you transact, you're subjecting yourself to a number of different things. Firstly, your personal judgment to outperform the market, that you're going to improve the capital allocation. Secondly, and a big one is typically there's a tax consequence for every transaction that you make. And if you're making multiple transactions in that 200-year period, you're going to be taxed multiple times. So if you look at, say, typical tax regime in the US on capital gains would be circa 30%. Now, if you do that 4 times in 100 years, that's only one transaction every 50 years. You're going to end up with less than 40% of the original capital that you had.
Assuming the capital doesn't grow.
Yes, but let's look at it in Bitcoin terms. If you bought and sold Bitcoin 4 times and incurred that 30% fee 4 times, you'd have less than 40% of the original Bitcoin that you started with.
You can think of that tax almost as volatility, right? So when an asset draws down by 30%, it has to make 60% just to get back to even. Mm-hmm. So if you make that transaction, 30% goes to taxes. Now that next transaction has to go up by at least 60% just to get you back to where you were, right? So that's sort of how that volatility, if you want to call it that, of the taxation will really draw down on your long-term gains.
Correct.
Plus, to your point, I did like that. I mean, then that draws on your own judgment. And so when you're thinking about 200 years, now you're depending on the judgment of all those heirs down the line that they're going to make good judgment, which is probably pretty hard to do. Okay, so that's the longest lasting, meaning I can set it and forget it. I'm not subject to all the different transactions, the subjection of people's interpretation of markets at that time and whatever. Then you said it's the best performing asset. Now, we certainly know factually it has been the best performing asset in the world. Some people still think it's just magic internet money. You said that pretty matter-of-factly. So why do you think it's going to continue to be the best performing asset in the world?
On the most basic of premises, I believe in humanity, and I think we will evolve, not devolve. If you believe that we are going to improve and our lives are going to get better, then Bitcoin is going to fundamentally accrue more value and grow into the future. If I look at all of the avenues of capital and the places of capital where they are stored and how they move, how they are used, Bitcoin is an insignificant market in relative terms to the bond market, stock market, property market. And I look at with a deep understanding across all of those asset classes and how that compares to Bitcoin, and it will be a one-way valve. There'll be a drain of capital from each of those large assets into Bitcoin. And so what does that do at a time when Bitcoin is becoming more and more scarce, so there's less and less coins on exchange? Bitcoin will, as the market cap grows, will be able to access bigger and bigger capital pools. So you have larger capital pools trying to find less Bitcoin. And I look at this and think, this capital appreciation in Bitcoin hasn't yet started. A lot of people think, oh, well, it's been the best over the last 15 years. It can't go any further. But they fail to understand that there's a host of reasons why this little asset called Bitcoin that is inconsequential in global terms can take on an infinite amount of capital. And to me, I look at the future and think there's no other asset that I want to be holding other than Bitcoin if you want to capture that upside. And bring this full circle to one of the points you made earlier. This is really one of it's a real dichotomy because you have what people think is a volatile asset, which is actually a risk-free asset when you understand it. And it's the best performing asset that you want to put in a portfolio that is going to preserve your wealth. So a lot of those things just do not marry up to what you would think is a sensible investment decision. And this is where, when people look at it without studying, I think they suffer cognitive dissonance, because a lot of those things can't be true at the same time. And Bitcoin is the first time that those things are true.
I want to take a second just real quick to just give you a reminder. The reminder is take control of your Bitcoin. Look, for the first time in history, we have a way to preserve our property, take custody of our property and protect it with no cost. You can't do that with gold. You can't do it with your stocks. And so we can do it with Bitcoin, and you should. Now, don't store it on an app on your phone. That can get hacked. What you want to do is use a hardware device, something like this Trezor right here. So basically, your private key sits here. When you want to do a transaction, you plug it into your computer, sign the transaction. When you're done, you unplug it and put it back into your safe. I've used Trezor for now, 6-7 years, because I think it's the easiest one to use. I've tried, I think, pretty much all of them. And it's also open source, so you can trust the code. And again, it's easy. Why easy? Because if it's too complex, it makes me think of how many potential holes and risks there could be, not just in the device itself, but even in my own ability to secure it. So I want something fast, I want something easy, and I want something safe. That's why I use Trezor. And if you don't use Trezor, use something. Please get your Bitcoin off the exchange. Use a hardware device to secure your private key. And if you like Trezor, check out the link down below. What do you think about somebody like Larry Fink, who went on TV a couple weeks ago and said, hey, I think that Bitcoin's a legit asset. Everyone should take another look at it, for example, right? And we've seen many examples of that. Trump was just speaking about Bitcoin and the importance of Bitcoin after a couple years ago, saying that he thought it was a scam and whatever, right? Are those people just changing their mind to jump on the bandwagon, providing a lip service? Does Larry Fink, just want to pump up his own book? Or do you think it's possible that people can actually do research and change their mind?
I think Larry has found something. I think Larry is sincere in the interviews that you're referring to. I think he has done an enormous amount of work that, as Bitcoiners, we're not privy to. And I think he's got a huge amount, like a huge team around him with really smart people who are giving him arguably the best information. Now, Wall Street are full of really smart guys. Yeah. But if you look at Larry Fink's genesis story, you realise that he wanted to tokenise the world back in 1980. And it started with residential mortgage-backed securities. Now, I look at the work that he's doing with the ETF, and there's an opportunity for Larry to, I believe, create the world's greatest investment product, which he tried to do with the residential mortgage-backed securities. That was an attempt to tokenise real estate, all real estate globally. That led to a catastrophic failure in the GFC, because as you... and the prelude to that was you had the investment banks wanting to monetize that product up front and then export the risk to Main Street and pension funds globally. Sadly, this led to a credit boom. This led to the GFC. But what happened with that credit boom and GFC was there was an insatiable demand from Wall Street to create more products of that mortgage-backed security and then on-sell it. However, that meant that the Main Street lenders had to go out the risk curve to find poorer and poorer quality borrowers to fulfill that need. And this is what led to the ninja loans, the no income, no job applicant loans.
They were great. They were perfect.
Fabulous. We loved it until we didn't. Yeah. And this is the problem, is that Wall Street monetized it and took all the profits and no risk, and they exported all the risk. And then when, the poor, retail borrower who couldn't afford $1 million mortgage, on, the salary of someone stacking shelves, led to the underpinning of and the cascading of values across the world. Now, I look at that and I think, what happens if we get a principal protected note and Larry starts issuing that, where he marries up a 5-year US Treasury with Bitcoin? And so you get a capital guaranteed note where they issue a $10 billion note, $8 billion goes into a 5-year Treasury. That 5-year Treasury grows from $8 billion to $10 billion in the 5 years, and then they get to then invest $2 billion into Bitcoin. And that way, if you put in $1 million, the worst result you can achieve in 5 years is your $1 million back. But this gives an opportunity for Larry to effectively tokenize the world. And this is ultimately what he wants, and he can achieve that with US government-backed debt and coupling that to Bitcoin, both of which are risk-free. And then that takes all of the risk away from retail investors, retail mums and dads, and it puts it firmly and squarely on the shoulders of the two risk-free assets in the world that we've got, which is US government treasuries and Bitcoin.
Yeah. Yeah, I agree. I mean, when I listen to Larry Fink, he doesn't just say, oh, I like it, you should buy it. He gives the reasons, like the mechanisms, supply-demand mechanisms of why it makes sense, of what it protects you from, of why it goes up. And so to me, that gives me like a level, I think he demonstrates that he has a level of understanding about it, not just lip service. I think it's crazy for people to think that you just can't change your mind. I mean, the smartest people in the world change their mind probably the most. Right, I think a sign of intelligence is how quickly you can change your mind based off of new information that you've received. So it never ceases to amaze me, and I suppose it's just an example of how closed-minded some people are. It's like, oh, but he said that 5 years ago.
Well, I think credit to Larry, he has done a great job in changing tack on that. I think it's very difficult. One of the talking points he most recently made, where I genuinely feel like he understands the problem. I haven't heard him talking about debasement of the dollar. Now, he talked about the debasement of the dollar in America. He talked about the debasement of dollars around the world. He clearly understands the problem of the money printing and how Bitcoin solves it. So hats off to Larry, one of the smartest people in the world and arguably the greatest salesman.
Now, getting back to the question that led into this, which was I was just asking sort of, you had made the statement that it's the best performing asset. And so again, I said it has been the best performing. Let's think about the forward projection of this. Michael Saylor laid out some math, which we're going to link to Michael Saylor's interview presentation down below at the Bitcoin conference in 2024. It's certainly worth a watch. And Michael Saylor sort of laid out this 21-year projection, and he gave sort of three price models, bear, medium, and bull, or whatever it was. I thought it was pretty good. Certainly might be conservative on the bear case, over-aggressive on the bull case. I don't know. You think maybe the math might be a little bit off. Maybe where do you think the math is when you're looking at the projection, right? So and this is where a lot of people get things wrong, right? So when you're investing your money, like I always tell people, like, you need to know what you're expecting when you get in, right? Where do I think it can go? Over what time frame? What are my risks? You need to have a plan for that. So if you're advising your high net worth individuals on buying Bitcoin, like where do you lay that out? How do you project that out?
I think it comes down to a weighting to start with. So you need to understand what their risk profile is to understand what they can and can't sleep with. So I urge any client to invest however much they can invest without losing any sleep. Now, I typically start that conversation at 10%. For families, that's an inconsequential amount of wealth. It's embarrassing if they lose it, but it doesn't change anything in their life. It doesn't change where they holiday, where their kids go to school, where they live. Nothing changes.
Now, just real quick. So 10%. Now, I could put 100% of my wealth in and have a 10% stop loss. So I'm only risking 10%. Or I could put 10% of my wealth in and have a 0% stop loss. So I'm just curious on that because the chance of Bitcoin going to zero is highly unlikely. I mean, it's not even probable, right? It could draw down 50 or 75%. So if they put 10% in and lost half of that, that's kind of inconsequential.
I agree. Okay. And this is where it's a long game and people take a long time to understand it because as simple as it is, 21 million, and that's all they really need to understand. There are so many other factors that they need to understand in order to get comfortable with putting in additional capital. We like clients to hold the underlying because we think that's going to create the greatest optionality moving forward, and we try and veer away from ETFs and the rest of it because if you want maximum optionality, you want to hold the underlying. Now, a 10% allocation, it drops 50%. I always tell my clients, now, whatever you put in and you make that initial purchase, just be sure to understand that this could drop 50% tomorrow. And then I'm going to come back and ask you for another 10% to put in the next day when it's dropped 50% so we can dollar cost average into it. Now, on a new investment, I haven't met a client yet who says, you know what, that's a great idea. Here's my money, let's do it. It takes a long time. It takes a lot of education to get a client comfortable with a serious allocation. By serious, I mean anything over 5%.
And that's a really good point that I'll just hit on for a second. I want to get back to the price predictions, but just hit on that for a second, which is for these high net worth individuals, family offices, and institutions to make a move, it doesn't happen quickly.
Yeah.
There's big numbers. There's a lot of information they have to take in. There's a lot of education they have to overcome. And a lot of times there's a lot of decision makers that have to be involved in this, right? And I just want to hit that point because, with what's happened in the ETFs and BlackRock and, now president's talking about it, a lot of questions might be, well, why aren't more people buying then? And I would say they are, or more specifically, they're getting ready to.
Correct.
Just as an anecdotal piece of information, in 2021, I went and spent the year in Puerto Rico. And Puerto Rico is sort of this gulch where like all the rich people are moving over there, right? And my friends over there were some very, very, I'm not going to name drop them, but very, very influential like hedge fund managers and like very, very established investors, billion-dollar funds, et cetera. One of my probably best friends over there at the time, he doesn't believe in Bitcoin. Mm-hmm. He's a trader. He's a very well-known name, super brilliant, like amazingly brilliant. And he bought Bitcoin at like 18,000 in the fund, sold it at like 45,000, like crushed it for his fund, right? But he just is like, no, I just, whatever. Like I kind of like Monero makes sense because it's private, but like not Bitcoin, whatever. He's like, to me, it's just a trading toy. That's always been his approach to it. That being said, about a month ago, I talked to him, and he's been out since it was around the 48,000 range or whatever. About a month ago, he said, Bitcoin is now the single largest position my fund has.
Amazing.
And I said, why? And it's not because all of a sudden he believes in it. No. He's a trader. He said, if you knew the amount of billionaires that have called me and asked me how they can get into this and secure it for a long period of time because of the craziness of what's going on in the world, you would understand why I'm so bullish. And so I just say that story just to say, like, we do have all these people that are trying to get in to the point that you're making, right? There's a lot of education they have to overcome. It's coming. Would you say that's fair? Is that kind of what you've seen in your own experience?
Absolutely. And this is the only asset that is ex-legal. So it's outside of the purview of the US government. It's beyond their touch. It's about the only thing that can be, other than physical gold. And physical gold, we all know, has its own constraints.
Okay, so let's get back to the price prediction.
Yes.
So Michael Saylor sort of laid out this 21-year plan by 2045, and it would have a base case of $13 million, let's start with a bear case of $3 million per Bitcoin, a base case of $13 million per Bitcoin, and a bull case of $49 million per Bitcoin. I thought, it was thoughtful. He said that right now, currently, Bitcoin's had a compound annual growth rate of about 150, but right now we're having about a 55% AR. And he says, if this decelerates 50, 45, 30, whatever, and finally stabilizes around 20, which is about double what the S&P 500 is. Now, you've mentioned the scarcity many times. Double the S&P 500, like, that seems super ultra conservative to me. Mm-hmm. But you think maybe some of those numbers are off?
Just a little.
Okay.
And I think we all love Michael Saylor. I think he's Bitcoin's greatest proponent.
We're all lying. None of us know the future, right? Like, we don't know.
That's true. But just if you look at his work in there, one of his final comments in that speech was, we have 1,000x from here. Now, the price at $65,000 on the day, give or take, would mean we've got a $65 million Bitcoin coming, not a 49. So I think Michael would prefer to surprise to the upside as opposed to put a big number out there. Not that 49 is not a big number, but I think there's a host of things that I disagree with fundamentally there. And if I look at this, and I think probably the linchpin for something going substantially higher than what he lays out is the fact that we haven't had someone with a money printer being able to buy Bitcoin yet. No one has done that.
Right.
When we have someone do that, then that can dramatically shift that playing field to the significant upside.
Yeah.
When the US Federal Reserve decides to buy some and can have the ability to hold their finger down on the money printer, they can buy a limitless amount and set the floor at 10 million, 100 million, whatever they want. And now all of a sudden we're in a completely new paradigm. So for me, it's very difficult to argue with what Michael says, and I think all of it's consistent and congruent thinking that I agree with. The only X factor that changes it to the upside, not the downside, is a government with a money printer that gets involved and says we're going to set the floor.
Yeah, I mean, I think that is maybe a little bit baked into the cake in a sense, because he's saying that it's projected to capture 7% of the world's assets. And so if you think about it, I mean, really we have this amount of assets. So I like to think I laid out a case that there's like 3 ways I would think about valuing Bitcoin in the future. So like the venture capital method. So like Uber took money from taxis and limos and vans. So if I got 5% from each of those, it's worth this, right? And so then we can look at the total value that Bitcoin could be pulling from. So Michael Saylor laid out, $900 trillion in assets effectively. So if we get 7% of that, for example, right? I think if a sovereign were to buy it, it would just get to that percentage of global assets faster, right? So I want to get back to that because of what Trump's announcement was. But I also think about it in the sense of not just if a government were to buy it, but the rate of debasement that we're facing in the future. So Michael Howell, in my opinion, probably the best in mapping out global liquidity flows. And so it's not just looking at what the Fed balance sheet is, but the major central banks of the world. And you can see that the S&P 500 is basically moving in lockstep with the global liquidity. Yes. So at about 12%. So it looks on paper you're going up, but your purchasing power isn't growing. But Bitcoin, so gold has a 1.49 sensitivity ratio. So for every 10% in liquidity, gold goes up by 14%, a little bit better. But Bitcoin has an 8.9 times sensitivity. So for every 10% in liquidity, Bitcoin goes up by 90%. So you could just look at, to the point, I guess if the central banks use debt, but that expansion of the monetary base. And all we have to do is look at the projections by the government. In the U.S., the Congressional Budget Office, CBO, tells us what it's going to be by 2050, right? And so that's one way to look at it. So not only could it capture 7% of the world's assets, but today they're at 900 trillion. Those assets could be 1.4 quadrillion by the time it gets to that 7%. And that's where it's probably undershot to the downside.
That's it. And this is where I look at things a little differently in that if we look at the ultra wealthy, we look at Elon, we look at Jeff Bezos, they store their wealth in the companies that they own because they've got the most control over it. They believe that has the most significant upside. They're not, 99% of their wealth would be stored in those assets that they've built from the ground up. They're not spending 100% of their wealth per annum. They would be spending, I would have thought, 0.1% of the wealth per annum. That seems like a pretty fair assessment. What I look at, and this is where I think Bitcoin completely redefines this gives everyone on earth, it democratizes assets, and it gives everyone the ability to be a Jeff Bezos or Elon Musk and own Tesla and Amazon themselves. It gives them a monetary premium into the future that has no comparison in relative terms from an investment perspective. And when you look at that and understand that price is determined at the margin, we can have so much more capital stored in Bitcoin that's going to be, in percentage terms, we could see 99% of the world's wealth stored in Bitcoin and only 1% is for real world assets, because people are going to want to have that premium of being able to move their value forward into the future for future purchasing. So I'm probably the most bullish person when it comes to that, because I understand the value of optionality into the future, and this is where Bitcoin is the only asset that has that feature.
Yeah. Now, what's interesting with Bitcoin is it started in the shadow supercoder world or whatever, and sort of kind of spread to the people, right? A decentralized bottom-up approach. And so it was people, and eventually it got to a government in El Salvador, but that's like probably still the bottom of the government level, right? They're one of the poorest countries in the world. We're the most dangerous country in the world now, one of the safest. They're turning it around. But to that perspective, kind of a bottom-up phenomenon.
Yes.
And President Bukele from El Salvador, has been around talking to a bunch of other government leaders, but other small government leaders about doing something like this. And so, again, a bottom-up approach. I always thought the U.S. would be sort of the last mover advantage out of any country because they have the dollar. They have the most to lose. So to see two of three presidential candidates come out and announce that they would have a strategic reserve, trying to bring it kind of on par with gold, as well as even if neither of them win, we also have Senator Loomis, who put together a bill to do that. It seems that switches from a bottom-up approach to a top-down approach. I mean, back to game theory, if the U.S. announces this, then I think all the other nations are sort of forced to react to that. Currently in the betting markets, Trump is favored to win by 56%, and if he wins, I think he would probably do it. Like, why wouldn't he? So that's basically giving us, at this point, per the betting markets, a 56% odds that the U.S. will adopt this and other nations will be forced to. I guess that's the way I read it, and I'm curious what your take is on that specifically, because we haven't really seen the price of Bitcoin pump based off of that news.
I think there's far more indecision in the US voters' mind than what the betting markets predict. I think Kamala Harris is a much bigger threat than people are making out. I think people are very dismissive of her, and I think the Republicans have got a huge amount of work to do if they want to win this. It's not a lay down like they'll have you believe.
Yeah.
That said, this puts an enormous amount of pressure on the rest of the world that they need to act really, really quickly. And we could be much closer to the suddenly part of the gradually then suddenly than we realise, because you have 2 of the 3 presidential candidates making promises. I thought Robert F. Kennedy was absolutely brilliant. He showed a deep command and understanding of Bitcoin on a very deep level and had some great policies.
He really had a good scriptwriter for sure.
Phenomenal, yes. And he delivered it well. Trump, on the other hand, he made a promise that that's all he needed to make. He said, hey, I'm going to make sure we don't sell the Bitcoin. And what's ironic, 3 days later, US government sells 30,000 Bitcoin or whatever they've sold, they've put to market. Yeah. I want to see a competition between the Dems and the Republicans, who are the only 2 feasible candidates. And I want to see them fight for Bitcoin. I want to see who can put together the most outrageous policy. But to me, what we saw in Nashville was enough to say, okay, now anyone dismissing Bitcoin as that magic internet money sort of really needs to, have a look, go away, reassess, and realise that we're standing at the forefront of global adoption on a government level.
Yeah. And one thing about these types of things, when they tease a new tax thing and then it kind of goes away, they sort of are like seeding the future almost, if you will, right? Desensitizing us to the future. And so even if this doesn't go through right now, it's the direction in which we're going. And so if you're a long-term thinker, you should certainly be paying attention to these signals, right? They're there. We're going in this direction. And I would imagine that even if Kamala wins and even if the U.S. doesn't go this direction now, other nations are probably paying attention and go, well, maybe we should try to front run that. Would you say so?
It's the only logical thing to do.
Yeah.
There's only one way to, you can't win by not playing. You have to enter the field and you have to start playing. Otherwise, you completely lose.
Yeah.
So I look at this and I think, effectively, you've been gifted by the US government or their proxies in RFK Jr. and Trump an intent of what they are going to do.
Yeah.
If I was any other country with a money printer, the finger would be on the button now, and I would be seeding whatever dollars.
It's not just a money printer, though, right? So right now we have the rise of the BRICS, and the BRICS are deciding to recycle their profits, their reserves, not back into U.S. Treasuries, but instead to gold.
Yeah.
You got to save it in something. Mm-hmm. And so well, we don't trust U.S. Treasury anymore after you've taken Russia's or whatever, you're debasing. We're not going to do that. We'll just buy gold. And so it's not necessarily a money printer, but where do they save it? And so they could certainly do that into Bitcoin. Let's sort of transition this and ask somebody who advises high net worth individuals and families on how to get into this. Just how can we generally advise the audience? So Michael Saylor laid out sort of what he called it, a normie strategy, a 10% a Bitcoin maximalist strategy, and a double and triple maxi strategy. So what would your normie, maximalist, and triple maxi strategies be that you would advise somebody on?
It really comes down to a personal preference, but I think you've got to start with an allocation that someone is comfortable or willing to lose. Now, this is counterintuitive, but people need to learn, and Bitcoin's been around for 15 years. The belief that people will voluntarily learn about this new asset class and spend 100 hours going down the rabbit hole and figuring things out, I think is a complete furphy. That is not going to happen. No. What I would prefer to do as an advisor is walk clients to the deep end, tell them to buy 10% and literally push them in the deep end, and then ensure that there's a life raft, a stick, something to pull them out and make sure that they're not going to hurt themselves. Because once they're in the deep end and they're fighting for their lives and trying to learn as much about it, they're incentivized now. They have skin in the game to actually go down that rabbit hole and start learning about it. And once they learn about it, they're going to apply more capital to it. So I think the more capital you can get someone to allocate at the beginning, the bigger their incentive to learn, the faster they learn, the more Bitcoin they'll end up having. And so, I think that the saying from Gigi is, the more you know, the more you buy.
Yeah.
And so in order to get them to that stage, though, you just need to effectively create a safe sandbox or a safe place for them to invest as much capital as they can where they're not going to get wrecked. They're not going to pay tuition fees. They're not going to get scammed out of Bitcoin. They're not going to have someone rob it or alternatively send it to the wrong address. That is something that you can't do with, more than 1 or 2% of someone's capital. You can't have a tuition fee payable of more than 2%. To me, even 1% is unacceptable. But it's a great lesson for the rest of your capital and investment decisions moving forward. So I think, and what we try to do is create a safe framework for owning the underlying asset so that clients can put in 50, 80% of their capital if they was, so wish to, in a safe way that they're never going to lose their Bitcoin. And to me, the preservation of their Bitcoin, and back to that thing that we talked about at the start, the return of capital, not the return on capital, is the most critical component. Having that custody, self-custody down is arguably the most important thing you can do when it comes to Bitcoin.
So what are the steps to that preservation of Bitcoin, the custody, self-custody, that they need to be aware of?
I think you want to make sure that you have got that in a way that removes every single point of failure. So you can't have a single point of failure in your custody setup. To me, having a single SIG, a lot of people talk about, hey, let's buy a hardware wallet, put all your Bitcoin on that, and it's not your keys, not your cheese, so to speak. To me, that represents a single point of failure, because what happens if something happens to that device, or alternatively, what happens if something happens to you? Who is going to access that? So how we think about preserving that Bitcoin is ensuring that we remove every single point of failure from everything in that client's Bitcoin life. So that means ensuring there's no single point of failure from themselves, no single point of failure from us, no single point of failure from their multi-sig provider. We want to have multiple options for everything in place. And one thing that I've had, I guess, a very unique experience of is going through 3 probates now with clients. We've been doing this for the family office side of things for the last 8 years. We've sadly had 3 of our clients pass away, but I can tell you, and something I'm very proud of, that with the collaborative security protocol that we implemented for them, they were self-custodying, they had full control, full autonomy, but when that day came that they were no longer here, there was a seamless transition to their beneficiaries. And this is where, when you start storing significant amounts of wealth in Bitcoin, this becomes a significant issue that needs solving. And so the way we get around that is to have a collaborative security protocol. We hold one of the 3 keys for the client holds a key, and the multi-sig provider holds a key. And then couple that with advice, training and education around how to actually move and use that Bitcoin. And one of the key pieces that I think is really important for anyone with a Bitcoin setup is to have an estate plan protocol dedicated to the physical recovery of your Bitcoin. Because if you don't have that in place, there's no legal recourse, there's no mandate, no legal decree that the government can mandate the transfer of your Bitcoin from the protocol to your heirs. So unless you have the pragmatic recovery of your Bitcoin locked down, the legal framework for the recovery is a moot point.
So collaborative custody. So instead of having one single key, I have 3 keys. 2 of the 3 have to be present to sign the transaction to move the Bitcoin. But in a collaborative custody, I don't keep all 3 keys. I only keep one of them, and I use other people, for example, your company and another company, to hold those keys. So then if I were to die or lose my key, hopefully the other 2 people have their keys.
Correct.
Or if something happens to one of them, hopefully the other 2 parties have the keys.
Correct.
That's kind of the way it works. And then if I were to die, then my trust or whatever, my will, could then say, hey, these 2 people need to sign the transaction to move the Bitcoin.
Correct. And when you're dealing with large amounts of wealth, the beautiful thing about that setup is that you can create some very strong asset protection strategies. I know we're in the US and your legal system is out of control when it comes to litigation. Having keys in different jurisdictions gives you the strongest form of asset protection that you could ever have. Because all of a sudden, now there are multiple different legal jurisdictions that if someone was to ever litigate you, they need to go to different jurisdictions in order to access that coin or that key and ask that to sign a transaction to move the Bitcoin to where it needs to be. So for me, moving forward, and this is just one of the other reasons why Bitcoin is the ultimate asset when it comes to intergenerational wealth. This is something that can't be done with any other asset.
Yeah, amazing. All right, Peter. I think we've gone over a lot. That's some good information. I want to link down to your services down below if anybody wants to talk to you about that. We'll link to that. Anything else that you should want to point attention to, or that you want to kind of close it out with?
I think it's just an important time, if you're not in Bitcoin, to get into Bitcoin as quickly as possible. We've got some exciting things that are coming to fruition, much of which we talked about today. And if you need help getting started, reach out to the team. We'd love to help.
Great. Thanks so much, Peter.
Appreciate it. Thanks, Mark.